Good morning. It's Tuesday, April 25th. And yeah, your boy is still sick. And I'm going to move the microphone a little bit, so you're going to hear some stuff. Morning, Lena. I am 95% better. I'm flying back to Atlanta tomorrow. I will not have this microphone. It'll sound like crap. I'll do it on my AirPods, probably, or some other microphone. But it will not sound this good. So enjoy the deep, full richness of my voice for now. Let's go over some stuff. First off, sorry about yesterday. There was on the private Facebook group that we have, if you're looking to join the private Facebook group, down below there's a link tree. The Facebook logo is within the link tree underneath the picture. You can just click on there and go join. And the host of this podcast is Bozo, just so you know. But there were some issues with Spotify, and sorry about that. Yesterday, it seems to have worked out. Spotify has not been very good to us podcast hosts of recent. Last week, there was an issue with a video upload or something of that sort that took like almost a day. I'm sorry, about 2 weeks ago maybe. And then yesterday, it was just a shit show. Where I guess the episode didn't show up or something like that. I don't know. By the time I got to it, it seems to have been okay. But Spotify reported an increase in users this morning. That's why I'm going off about Spotify. They are still not making money, but they increased their user base. The MACD crossed down, and it has you out with a 6% gain, 5.97. But they are up 2% to 135 in pre-market. So if you invested in Spotify back here in December, where it was trading at 78 and the algorithm gave you a nice $78 price target and said, hey, buy it at 78, then boom, you made a nice 50, 60% up here. You get back in at 124, you made a nice 6% there, and the MACD crossed up again. And you should be probably in on this one, but I will tell you, I work on Spotify. I have a financial interest in Spotify. I don't own the stock, but shit, I do my podcast here. The average price target is 136. You are trading at 136. Its 52-week high is 136. You're 3% below that. You're up 66% year to date. Why in the world would you invest in this? There are better places to start growing your money. Yes, they are only selling at 1.97 price to sales. So it's not super expensive, but this is a cash heavy business. And so when you look at insiders, they're not buying, they're not selling. There's nothing going on. So I would probably not look at putting money into that. PepsiCo of our core portfolio in TrendSpider, which is what you're looking at here. The algorithm got you in at 175. I said anything around 170 handle was probably a good buy. They reported strong earnings. They're up 2% in pre-market to 189. 189. I said Pepsi, Coke, just buy, on the weakness down here at 170 back in March. I said it just doesn't make sense. Brands have power. And when brands have power, they can raise pricing. And so Pepsi showed that they can raise pricing. The average price target on Pepsi is 193. Its 52-week high is 186. Right now you're trading at 189. I don't know why you'd put money into it up here. Wait, be patient. It'll be back down in the 170s. You'll be fine. You will absolutely 100% be fine. See, if everybody's selling in the 175 and 180, yeah, but it's not a ton of money. I mean, the $12 million sale on March 9th at 172. The guy probably, he's a director. He probably had a big pool that he had to put in the backyard. That's it. Nothing more than that. FRC, First Republic. I've been going off about this one. First Republic. Remember, this is the bank that had, Jim Cramer was touting himself that, oh my God, I told you to buy this one. And then it popped up from 45 to 90 in one day. And if you wound up getting in at 90, you better have sold at 90 when you got that pop, because the next day it was down into 10s. Honest to God, this one has just been a falling knife. The reason to get into this is in the 13 handle. If you get into it in the 13 handle right now, it is down 20%. It's got a 12 handle on it. This one went from 12 to 16 to 18 yesterday in the after hours. It was crazy. They beat earnings by a very, very large amount, $1.23. It was expected like 20 cents or something, like $1.23. So they killed it. The initial response sent it down, and the reason it sent it down, the reason it's down right now, is because deposits are down 40% quarter over quarter. In a healthy depository, hey, when the Fed says, hey, we're going to back this 100%, it's a $20 stock. It's a $100 stock if their deposits are actually healthy. So it's a risk. It is not a short-term kind of, hey, it's going to move back up here to 100 within the next week or so. I don't think that's the case, but it's at least going to be 20 in probably the next 6 months. So at $12, you're almost doubling your money. But it is a risk. Do not throw your entire IRA and retirement plan into this one. Throw some lunch money at it. There are several stocks that you could throw money into. So FRC is one. If you just want to spread your, trade this one, DPSD is one. I've talked about this one a lot. I mean, it's capitulating right here at about 690, about 650 is probably your floor. It is on its way down, so it's not like it's moving up and having a base of 650, but it's capitulating here. You've got this gap at 11 that I've been talking about that it hasn't come up and hit. But I think between, if you get this in the 6 handle, I think you could look at a 7, 8, 9 handle in a healthy environment. And again, lunch money, $20, throw $20 into it. DPST, another one that you may want to look at for a long term. And when I say long term, I'm talking more than a year, is Schwab. It's a $2 billion bank. If we go and look at Schwab, SCHW, look at their market cap is $94 billion. The bank portion of Charles Schwab that everybody's concerned about is $2 billion. The rest of their money is in brokerage and other businesses. It's not banks. So the deposits are $2 billion. That's 2%. It's a rounding error for these guys. The CEO, we talked about it a lot. Schwab bought a bunch of it. $10 million, somewhere in that neighborhood, at 60. So most of when you look at the insider trades and you look at them, they're buys. Look at that. And it's around between 57 and 53. Here's the CEO buy at 59, $5 million bucks. I mean, again, if you have management buying in there, that's a good sign. The average price target is 67. Its 52-week range is between 45 and 86. So that's a good long-term buy. Another good long-term buy that I personally own, Bank of America. Anything under 30. It's at $29.40. $29.40. I bought, I think, around 30. So I'll probably be adding to it. Just waiting for a little bit of capitulation here. You've got these gaps down here around 27. You see the button hook. I've talked about it. If you want to sell it on a short-term basis, you can. I bought it for a long-term. Another long-term one that I bought is Wells Fargo, WFC. You can see the button hook here. I bought this one, I think, at $40.50. And yeah, it's been in the 30s. So I'll probably be adding to it if it gets back to the 30s. Citigroup. Or as South Park would say it, Shitty Group. Citigroup, C is the symbol. Down here is the buy-in at about 44. You're trading at 49. So it's still a good bank. You want one that's in the core portfolio that I recommend. I recommend it more around 300 than at 344. But take a look at that. I mean, 318 back here on March 21st. You're at 344 right now. They've already reported earnings, and you've got confirmation here. You're just hitting that 200-day. You go up to 370 over that 200-day. So 344, I don't think it's horrible. If you like the Jeffrey Epstein correlation, then JP Morgan is your guy. I will not invest in JP Morgan just because of their cooperation with Jeffrey Epstein. I find it despicable. I find it horrible. I think they're just not a good thing, not a good bank. So there are better people than me saying that this banking crisis is not over, that you should be careful. So I wouldn't throw all your money in here. I wouldn't be going XLF, YOLO on that. But I do think that there's an incredible opportunity here. And with FRC in particular, they're cutting. They also said that they're cutting 25% of their workforce. They are reducing executive compensation, and they are reducing office space. So this is a bank that not only made good earnings last quarter, they are cutting their costs, taking this to trim the fat per se. So FRC, in my mind, if you got a $13 stock that was just a month ago selling for $120, what's the book value? Let's look at the book value of FRC. FRC's book value is 75, and they're trading at 13. Again, if they get taken over, that book value is completely worthless. But, in my mind, I think it's worth some lunch money there. As Sherry always puts it, she put her lunch money in there. So I do think that there's an opportunity there. Let's see. We looked at FRC, GM, which is the, hey, let's ask the government, GM stands for government must bail us out, because there's been more bailouts of this company than any other company. GM is just a horribly run company. They beat. They are up 2%, 35. I'm not a big fan. I'd rather see in Tesla. I mean, here's the thing. The valuation of Tesla is significantly higher than GM. If we go over to FinViz and just look at it, it's higher. Okay, I think they're working on our floors. But GM and Tesla, the difference is the Tesla has a 18% margin on their cars. GM has like a 3 or 4 or 5% margin on their cars. So everybody's worried about the Tesla margin. They still got room to play. In my mind, I think with Tesla, you're coming down to the 150 handle. I think a 150 handle I'll probably get back in, because at some point I'm going to be able to sell that for a 200 handle. I just don't see Tesla going back down to the 80s. I think you cover this gap down at 150. Again, if he's got a demand problem, then he's got plenty of production to kind of cut. But you just don't have the number one selling car in America, and then the number one selling car in Europe. I mean, that's out there. It's the Model Y. And my parents are looking at a Model Y today. They're looking at getting rid of their Model X and getting a Model Y. April 4th, this is there's been some fairly big sales here from Elon Musk back in December, but not since then. You're seeing $100,000, and there's been some departures, blah, blah, blah. But the one thing is, when he announces a new CEO for Twitter and he gets more focused on the business, you're going to see Tesla take off. I think on that day, you'll see a bump. Verizon. This is an interesting one. I have a video up. Verizon or AT&T. Both of them are just shit shows. I mean, honest to God, it's just very bad companies. When you are a CEO, the CEO of Verizon was on, and the two anchors, Joe and whatever the other guy's name is, on CNBC, they basically had Hans in the studio, who is the CEO, and they looked over at him, and they said, why is your stock, an AT&T stock, doing historically so bad, whereas T-Mobile is so good? I mean, look at this. This is Verizon stock. I mean, look at 2021. You're up at 58. You're at 37. And they said your yield is what, 9% now? And the guy kind of shruggingly just put his shoulders up and he said, yeah, it's a high yield. And the reason it's a high yield is because your stock is doing so shitty, it's been just tanking. And what was his answer? Well, we just got our C-band, approved. Yeah, so people are taking your wireless service at their house for their home internet. Great. Are you making huge inroads on that? No, you had to spend billions of dollars to build the network out so that you could do that. And you're just not doing it quick enough. So do I think this is a great opportunity? No. But if you like yield and you want to trade in the $30 to $50 range and just take 7-8%, then this isn't a bad stock for you. Personally, I'd just buy a bond. Just buy a bond because it's guaranteed there. But take a look at that stock and then take a look at T-Mobile. Let's see. TMUS. I got to change that. TMUS. Take a look at this one and let's look at the weekly of this. Look at how different that stock looks. Just take a look at it. That is versus Verizon. Let's go over here to our, SPY and you can see nothing changed since yesterday. But let's take a look at Verizon. We're going to go in here and I'm in seekingalpha.com. And we're going to look at Verizon, we're going to look at AT&T, and we're going to look at T-Mobile. And we're going to compare these. Okay, the pink line is T-Mobile. And I probably should move my head here. But just go to Seeking Alpha and do this chart for yourselves. And look at the 1 year performance. T-Mobile is up 13%. AT&T is down 6%. Verizon is down 25%. Look at the 5 year. The 5 year is even greater. T-Mobile's up 140%, and Verizon's down 20%, and AT&T's down 25%. 1 month, T-Mobile's up 2%, Verizon's down 1%, AT&T's down 5%. So it's just a crazy when your CEO like Verizon is on there and he has no answer. That's just it's you don't want to be in that stock. So, and I could be wrong. I could totally be pulling a Jim Cramer where he goes on. Again, I put out a video saying Verizon was a good investment, and I thought it was good. And just like Jim Cramer went on and cried about how he was wrong about Facebook and Meta, and from that day, Meta is up 100%. And speaking of Meta, Meta tomorrow reports. I think you're going to see some hype on this one, personally. Now, it did get you out of that investment. You're out with a 14% gain right before earnings. I don't think I'd get out on this one because I think Mark Zuckerberg is going to say, we've continued to cut costs. We're seeing a huge influx of cash to our business because we're not spending it on the metaverse and we're cutting costs. We're efficient. I think he's also going to bring up AI. I think he's going to bring up some of the WhatsApp stuff that they've done with end-to-end encryption. I think there's a lot that he's going to bring up. Am I getting into this stock at $211? I might nibble on it. And the only reason I might nibble on it is because it hasn't come down below 200. I've said 200 is the key. But I think with this earnings, they're going to hype this one up. Look at that. $1.64 per share, $1.76 per share. Let's see if we can go back. And we'll go back. Maybe I have to do a weekly. Yeah. 246. Just look at that. 246, 272, 376. It was 376 earnings per share, and the stock was at 272. If they go back up into the 272 range, you're going to see the stock explode. It's just going to explode. So they're coming up after the bell tomorrow. Today, after the bell, you got Microsoft. Now, I don't have any insider information. My brother does work for Microsoft. There's no insider information, but essentially what he believes is that they're going to have an incredible amount of AI announcements on their earnings call today after the bell. Basically, the Microsoft Suite, Bing, and other consumer and business software are far further along with their AI than Google, Meta, or anybody else. So he believes that that's going to be a focus of Satya's CEO kind of speech on earnings. And I think you're right. Microsoft here, again, it got you out right before earnings with 10% gain. They're coming up. I mean, again, do I think that you should buy it at 280? I just don't. I mean, let's take a look at the 52-week, and the average target price is 300. So if you buy it at 280, great. You can still make close to 10%, but you're only 4% off your 52-week high of 294. Do I think you should buy it here? No, I just think that there's some type of pullback coming, and I think if you're patient, you can get it. But if you're in it, I'd definitely just hold on to it. This is one that I would not sell into earnings. I would not, even though it's high, I just don't think it makes sense to pull your money out. Because when are you going to get back in? That's the basis. Google reports after the bell today. You can bet they have been on an AI kind of push with their 60 Minutes piece, with everything of that sort. They're just pushing AI. So you're at 106. I said buy it under 100. I think you're going to see this one pop as well. If they are able, again, Christian brought it up yesterday, is that Netlist lawsuit. If for some reason Google decides, hey, we're gonna have to shut down our search, I don't think it's coming to this, but imagine how well Microsoft will do on Bing. I mean, where are you going for search? You're gonna go to Bing. You're gonna go to the number 2. So, Google reports after the bell. Am I getting rid of it? No. If they tank down to the 90s, I'm loading up again. I'm just adding to it. Another one that has been tanked before their earnings today is Enphase. We had this buy at 199. It's at 224 right now. Yeah. I mean, that's a nice, 10% profit right there, right before earnings. You're seeing it. It's still not up at the 200-day. But Enphase reports after the bell. If you want to play the regional banks and you think, I got some lunch money here, Pac West reports. FRC reported yesterday, Pac West. PACW reports after the bell. They're trading at 11. This is one that was a $28 stock at before the whole crisis thing. The key is going to be their deposits. What did they say about the deposits? Again, FRC, their deposits were down 40% quarter over quarter. So what are they doing? A good example of when to sell, we talked about Microsoft. I just don't think they've gotten a lot of hype. I don't think you should sell that one. But a good example of when to sell into earnings, Visa. They report after the bell tonight. Do I think anything Visa is going to have some type of hype or some type of, hey, we implemented blockchain and we've got, cryptocurrency up to wazoo? Well, even if they did, look at this run all the way back from October where it was 170 and you're at 232. Take a look at some of the fundamentals. The average price target for Visa is 262. You're trading at 232. Look at the 52-week. 235. You're 1% below your 52-week high. Your PE is 32 on a credit card company. Just, again, if you want to know where I would sell into earnings and take some profits, it's with a company like Visa. I mean, it's a credit card company. They basically print cash. But it's a good example of when to sell into earnings. It's just probably not worth it because they're going to have to blow it out of the water with a 32 PE. Your forward PE is 24. It's not like it's got a huge dividend. It's up 12% year to date. Take your profits if you got Visa. Wednesday earnings, we talked about Meta. Roku is another one. Roku is one that has been hyped. You can see it's capitulating right here in the 60 to 70 range. I wouldn't expect it to get blown up, but I would expect if they announce some type of reduction in earnings for it to come back down here to the 50 range. You're trading at 59.08. So they report after the bell tomorrow. A portfolio one that I own is PXD Energy. PXD reports tomorrow after the bell. You can see the button hook here. I said get in 195 here. I got in at 208 here. Still holding this one. Added a little bit at the one when it dipped under 200, and I'm sitting at 227 right now. If it's slipped your mind, Exxon is rumored to be buying these guys. Where do I think they're going to buy them? I think they're going to have to pay let's just say a shit ton of money. They're going to have to back up the Brinks truck on this one. Target price 258. That's minimum of what probably Pioneer would say. Hey, we're at least 258. We're at least $300. They're going to have to add a premium on this. The PE is only 7, 11% dividend. 52-week range, they're 15% below. Their 52-week high of 268. Target price is 258. Look at the buys. I mean, it's only $50,000 in November. But they were buying at 254, 247. So, they report after the bell tomorrow. From yesterday, another one that's reporting that is Annaly Capital. This is the one with the huge dividend for the dividend lovers. Yeah, let me put on my Barry White voice. For the dividend lovers out there. This one, I think it has a 13% dividend. 13.36. So, average price target 22. It's at $19. So, you're 30% below your 52-week high of 27. One that reported that has been a recent one of mine that I purchased, and it was a purchase for a long term, and I purchased it at about $20 per share. So I'm down quite a bit. Is Cleveland Cliffs. Disappointing. I still have my small position. It's long term, so I will hold it for at least a year. I will add to it. Right now, I'm not adding to it. It's down 2%, 15 handle, 1586. It does not have confirmation. You're seeing a little bit of capitulation here, but I will not buy it until it has confirmation. If you look at the weekly on this one, this is COVID right here. And so pre-COVID, you were trading at $8. That's half of what they're trading at now. So it was a COVID winner because they were able to cut costs, increase pricing, and we saw a spur of steel and everything of that stuff. You can read about Cleveland Cliffs in this report. This is on directly from FinViz. It's Zach's report. It gives you some decent insight into the company. The problem is, as they were doing so well last year and reporting such great quarters, the year over year and the quarter over quarter just gets hurt. And so when Wall Street looks at continued growth, they can't keep it up. And if you're an $8 company and you're trading at $16, you better keep up your growth. And they just couldn't do it. So let's get into some scans. And I'm going to move over my notes a little bit so I can look at it and do a little bit of quick fire. Walmart is the only Dow 30 stock that has a cross up, and it's a secondary cross up. The cross up was down here in March at 136. Absolutely, you should have bought Walmart at 136. The reason it was down here at 136, if we go over to FinViz, the reason it was that low, go down to the insider buys and take a look at how many of the Waltons are selling. And they're selling big lots. Look at that. $218 million a day for what? Almost, 2 weeks? Just take a look at all those insider sales. This goes back to December. And they're selling at 143, 144. They're selling it at that price. But these people have so much money. They are buying new homes in every country in the world. They're taking some money. They're taking some profits. That's why it dipped down. That is from this point where it was selling at 152 to 136. They were just selling. Now that they're not selling, hold on, I need a drink of water. Sorry. Now that they're not selling, you can continue to see it go. Let's look at the 52-week range. You are only 4% off. There's no reason to buy this one, but it crossed up, secondary cross up. If you want to get one that I do believe has a higher potential, it's Target. 163.94 was the cross up. And like I've said before, I think that this gap back here just starts at 178. It started to fill it. It goes up to 220 or so. But I think Target's a great company to buy. They've gotten their inventory straightened out, and I think that's an opportunity. We talked about yesterday having a cross up on MPLX. It's just kind of floundering there before their earnings. Their earnings are May 1st. You can see this ascending wedge, and you're in at 34, and it's up at about 35 right now. In pre-market, it's at 34.75, MPLX. LAC, This is a lithium company, and there's talk about lithium kind of being on the outs, blah, blah, blah. $20.43 right now. It's been a falling knife. Their earnings are coming up May 5th. Not sure I would get into this one, but it had a cross up, and it is one of the energy ones that we trade because lithium has been so good in the past. If we look at a weekly of this one, you can see why it's been so good in the past. This was a $3 stock back in 2020, and it's a $20 stock right now. So it's been run up, but again, LAC, there's talk about lithium just being kind of So another energy company that came up, Halliburton. HAL. This is a great company, infrastructure of the energy sector. I think you've got an opportunity to get in here at 34. I think it's a $40 stock. So they reported 72 cents per share, 72% per share in the last quarter. It is down 1% in pre-market. Go and do your research on it, but it did cross up. Another energy company that might be good, and I'm not sure if it's too rich right now, but 150 is my cross point on this one. So anything above 150, I think you're safe selling. Anything below 150, I think you're good buying. It's LNG. This is Cheniere Energy. And if you remember LNG, this is a natural gas company, which, by the way, natural gas is down 3%. Boil is down, and KOLD is up. Boil is down at $3.15. It's going to probably go back down to that $2 handle. At the $2 handle, I think you may be okay buying, but you have to worry about the reverse split. That always happens with those triple levered ETFs. But LNG, if you remember what they do, what Cheniere Energy does is they take cheap American natural gas. They load it onto ships in Louisiana and Texas, I believe, from the pipelines. They load it onto liquid natural gas ships, and they ship it over to Europe. So they take something that is sold for $1 here, and they sell it for $15 over in Europe. So you have a great opportunity there. Ukraine and Russia, the war is expected to go on. Nord Stream is continued. Nord Stream 2 is never going to get approved again. Nord Stream 1 is going to continue to be meddled with. And it's still a question, did the U.S. blow it up? Did the Allies blow it up? Did Russia blow it up? But you're going to have some problems. Europe, before next winter, is going to have to refill all of their strategic reserves of natural gas. And if Cheniere can do it, they're probably worth way more than $150 a share. Just saying. That's an opportunity right there. As far as some of the levered ETFs, FAZ, Financial Bear, 3 times shares. FAZ had a cross up. This is the bear. This might mean, again, during the banking crisis, so if the banks go down, this goes up. It is triple levered. 2020, ironically, $20.20. Your RSI is down at 39. If you believe that the banks will continue to have problems, this is one you want to invest in. We talked about Norwegian yesterday having a cross up. It's kind of just floundering there and crossing up, crossing down. But the cross up happened at $12.95. It's trading at $12.94 in pre-market. NCLH, one of the pandemic darlings with a good dividend is AbbVie. And it's on its way back up after covering a couple of gaps. This is a secondary cross up. The initial cross up here was at 152. It's trading at 164. And the reason why it's a good pandemic play is because the dividend yield used to be like 8%, but because the stock has run up so much, it's 3.61. You can see it. If we look at long term of this one, I'll pull back. This was during the pandemic. If we go back here to March of 2020, you can see it was a $97 stock. I'm sorry. It was a $90 stock. It got taken down all the way to 62. And boom, you had this love of AbbVie. And it's up at 164 right now. If you got in at around $66, $65, I mean, you've tripled your money in a matter of just 3 years. It's a great opportunity. And finally, another cross up, Dollar Tree. Dollar Tree here, it's going for the gap. I've talked about this gap before, between 158 and 163. Down here at 139, you had this gap above, and it's going to fill it. Right now, it's got all the confirmation in the world. Their earnings are coming out May 24th. They just had their earnings back on March 1st. So there's no real catalyst here, but I think you're going to fill that gap at 164. It is a little bit expensive, but if we are going into a recession, $3's PE is 21. Yeah. So the average price target is 160, and that 52-week range, it goes all the way up to 175. So it's gone up above there. If we look at some of the insiders buying at 142 and 139. I mean, that's $1 million. That's just in March from the CEO. So, but yeah, okay. That's it for today. I will do another podcast tomorrow morning here. I will be flying back to Atlanta tomorrow night. So Thursday morning, I'll be back in Atlanta. So if you have any questions, hit me up. Sponsored by WEBULL. If you're paying anything more than $25 for your monthly phone bill, that's an unlimited service. Get WEBULL. Try it. The link below gets you $20 off. It is $5 for your first month. It makes no sense to try it out. If you're even contemplating switching your phone service and you have the most recent cell phone and you can do an eSIM, just get a new number. Try it out. It's $5. And if you like it, then port your number over and continue the service. It's nice and easy, very simple to do. Go to the link below. It is super, super simple to sign up. I have had so many people do it, and everybody who's done it writes to me and goes, why didn't I do this sooner? So do it today. The link is below. If you like the charts that I show and you want my algorithm, TrendSpider down below, 25% off DSP 25 or daily stock pay 25. Gets you 25% off. You'll get access to both my algorithms, the 4-hour and the 65-minute. You'll get all my watch lists. You'll get all my scans. You'll get everything. And so you don't have to wait for me to do a podcast. You could do it on your own and look at this stuff. And if any of this stuff makes no sense to you, then don't worry about it. I'll help you. I mean, they have one-on-one trainings with TrendSpider. You can, if you haven't ever had any questions, you can just text them and set up an appointment for 1 hour and say, okay, I want it to do this. How do I do this? And they'll help you, guide you through it. So yeah, I'm going to go take care of my sickness. The guys are here doing the floors. You may have heard it. So I got to get ready. Take care. Have fun. Enjoy yourselves.